Good afternoon, ladies and gentlemen. Thank you for having me today. My name is Tony Wong. Today I'm going to talk about impact investing and, more importantly, assessing the impact. So, a little bit about my company. I started a ESG consultancy called Alaya Consulting. What we are doing is very focused on environmental, social, and governance. Because since 2014, 4 years ago, Hong Kong Stock Exchange started to require all listed companies to report as assets and disclose their ESG impacts. As you can see, the stock exchange has been increasingly becoming more stringent in terms of the framework requiring companies to not only disclose the environmental impacts but also the social impacts. This slides just give you a little bit overview of what's going on around the world, not just Hong Kong, but also Europe, US, and also Asia. In China, they are thinking to start requiring all companies, A-shares, to disclose this sort of environmental and social impacts, expecting to get it implemented next year. Well, this is, I think all of you are pretty much aware of the uprising trend of responsible investing. This shows the trend in the United States. Whenever I go to conferences, investors screaming one message loud and clear is they are looking for quality ESG data. As you can see, more and more money globally are allocating into responsible investing and or impact investing. This is the Hong Kong Stock Exchange reporting guide. Companies are required to assess and disclose their impacts on 11 aspects. From the environmental side, there are 3 aspects. For the social, there are 8 aspects. So in total, companies have to, take a very in-depth study about what their business and operations have been doing and what sort of impacts they have on the environment and the society. And by society, we mean the employees, suppliers, business partners, etc. And the companies are required to disclose these impacts on a comply or explain basis, which means if it's not material, if you don't have a lot of impact on the environment, then you can really just explain instead of disclosing, not material or immaterial figures. Just make it easier for the investors. Well, this is my favorite cartoons, and if you have attended responsible investing conference, you probably have seen this cartoon before. It says the planet got destroyed, but at least we created a lot of value for shareholders. This really shows we can no longer keep it business as usual, because if we continue to do whatever we've been doing for the past 50 years, such as maximizing shareholders' values, then in one day, this might come true. And in fact, recently the IPCC Intergovernmental Panel on Climate Change have requested that all the corporations have to comply with the 1.5 degrees Celsius level. Otherwise, we will have serious consequences due to extreme weathers. I've taken a quick look at today's the companies joining the conference. Some of them are listed, already listed, right? Some of them are private. But whether you are in any round of financing, I think this is critical to understand that global warming or climate change is really a global agenda. And I'm happy to share with you that my company has, got our carbon reduction target approved by the SBTi, Science-Based Target Initiative. We are required to cut our carbon intensity by 43%, 47% by 2023. So it's pretty aggressive, but like what the IPCC report suggested in the previous slides, that all corporations have to cut the carbon emissions by 47%. Otherwise, we face serious consequences on climate change or extreme weathers. So globally, we have like 500 companies committed to the SBT. In Hong Kong, we are very glad to list alongside Hong Kong Electric Investment, which both of us got our targets approved by the SBT. Give you a little bit of information. SBTi is international collaboration between CDP, WWF, and World Resources Institute. So I'm sure some of you have quite aware of this beautiful infographics. This is the 17 Sustainable Development Goals. First launched in 2015 by the United Nations. Previously, it called MDG. Some people says this is really the closest version to the global goals. So, all corporations, individuals have a chance to contribute to these goals, and these are not only high-level sustainable goals. Each 17 goals has their own targets. In total, I think we have like 169 targets. So it's quite daunting, and unfortunately, there's a report also from the United Nations, I think in May last month, saying that in Asia and the Pacific region, we are actually not reaching or contributing to these SDGs. In fact, for some of the few goals that we are actually regressing. For example, SDG number 6, clean water and sanitation. Number 8, decent work and economic growth. Number 12, responsible consumption and production. We are actually regressing. So it's quite worrying about the kind of performance contributing to the global goals. And we've got targets to meet these goals by 2030. Otherwise, again, we're going to suffer from serious consequences. And these are all global goals that we need to, not only from a nation perspective, but also from a corporate and individual perspective. Um, and this is a survey from BNP Paribas. They asked, I think, some 300 asset owners and asset managers. Um, I think comparing to 2017, more and more asset owners and managers are looking to invest in ESG or responsible investment funds. But is that enough to solve the or contribute to the SDG and to the targets that we can reach it by 2030? Then it's still a long way to go, I would say. And here we can see that 65% of the respondents said yes to align their investment framework with SDGs, and even 34% agreed on the targets for SDG revenues. So for impact investing, really SDG provides a great tool or some high-level suggestion for companies to map against the impacts and to measure the impacts and disclose the impacts. Here, there are a lot of motivations for ESG investing or impact investing. 52% actually is willing to invest in ESG because of improved long-term returns. Oh, well, we can go a bit deeper into one of the SDGs. SDG 7 actually is about access to affordable and clean energy. And like I said earlier, each SDG has their own targets. So SDG 7, we've got 3 targets, 7.1, 2, and 3. So, for example, for target 7.1, from a business perspective, you can really come up with some business solution, such as building more solar farm, and set up your own commercial new sort of methodology in terms of tariff mechanism, for example, pay as you go. These slides show you it's a solar farm in China, Shanxi. It's a panda-shaped solar farm. It's actually one of my clients, Panda Green Energy. They are one of the largest solar farm investors and operators in China. And they are committed to build solar farms along the Belt and Road countries. Basically, their core business is contributing to the SDG number 7, providing affordable and clean energy. So, if you are a company, how are you going to identify the impacts? Because impact is not coming from your company alone. It's not just your company operations. You really have to map against your company's value chain. For example, from the stage of raw materials procurement through to product end of life stage. So if you are able to take a deeper look into your operation, you can see, for example, within your own operation, you may find, you have to provide your employees a decent work and environment, and satisfactory economic growth. And for the product end life, it's really aligned with responsible consumption and production. So what you're trying to do is to map against these SDG against the value chain and to increase the positive impact and minimize the negative impact. So again, how your company impacts the SDG. I think in the past, I think we've been very familiar with the financial reporting, and financial reporting is just about inputs, activities, and outputs. But when we are talking about impact investing, we really have to consider the last two, outcomes and the impacts. What are the outcomes from your products? Um, and what sort of impacts your products gonna bring. So you have to take a deep look into your own company and figure that out. Here's an example. For example, if your company is trying to uh, you know manufacture the water sanitation tablets, then you have to figure out, from input, activities, output, and outcomes, as well as impacts, um, how your products help solve the SDG. For example, here SDG 3, contributing to good health and well-being, because you have end waterborne diseases. Um, if some of you think the SDG is too high level, the UN Environment Financial Initiatives have just launched another positive impact initiative late last year. Um, it's that is the one that delivers a positive contribution to one or more pillars of sustainable developments, whether it is potential negative impacts to any pillars that can be identified and addressed. And I think that's that's it for my presentation today. It's a short one, so if you have any questions, feel free to have a quick chat here or afterwards.